So welcome to Money Matters. This is Kevin Hunter, your North Texas home hunter, real estate expert. We have Bryan Connatser.
Yes, sir. Loan officer, Cardinal Financial. Been in the business 29 years and enjoying this market like a ball of fun.
Yeehaw! Yeah, this is a crazy one. Just kind of watching some of the most recent stats, and kind of my world. Obviously, it's Frisco. I mean, I do all of North Texas, but I feel to be a true subject matter expert, you need to kind of focus in, hone in, if you will, right? And so 75035, 75034, the two main zip codes where I kind of thrive and focus, because that's where I live, and that's where you can become the subject matter expert for your clients, whether they be sellers or buyers. So it's really a pretty drastic market in each one, right? They're their own little market. So 75035, the median price range is about 630,000.
Okay.
Right. Inventory is 97, right? So right around 100, and that's going to change once some of the new construction opens up, right? They'll have a ton. But currently, right now, existing properties, it's right at 97. Still kind of it's not as much of a seller's market. It's really kind of breaking even now to where it's a little bit more kind of buyer. I see the pendulum kind of swing a little bit.
You're seeing the inventory increase just a tad?
Yeah, and some of the days on market is starting to increase depending on the property. You're starting to see, some homes go on the weekend, right? And then some homes, they're 40, 50, 60, right? So they're really kind of bringing that curve up where the average time on market is, about 50, 60 days. So then you get over to 75034, the average home price is $1,097,000, right?
Wow.
So a 400K jump
Across the street.
literally across the tollway. So it's technically Preston and then into the west. But yeah, so you see a $400,000 increase in the average home price. You see a lot less inventory, right? 60, 70 on the market at any time, and then you're seeing those kind of get gobbled up. Right?
So yeah, you're talking about the days on market might not be as heavy in that higher price point.
Yeah, and people are really going after the luxury homes, right? When you think about all the companies relocating to North Texas, the majority of those, I wouldn't say majority, but a lot of those being in Frisco area, right?
Upper management positions.
Upper management, leadership, right? And they're used, and if you're coming from the East Coast to the West Coast, you're used to a higher price point on your home. So it would intimidate some people. They're like, wow, that's a steal, right?
Yeah.
So those homes, they're gone in a couple weeks max.
Yeah.
So it's really interesting to see, like, what's all Frisco, right? And if you start blending things together, then you can see it. But if you if you do the analytics on the specific zip code, and you understand, the properties that are there, right? People call it inventory. It seems a little callous, a little cold. But if you look at the houses that are in those respective markets, it's a completely different conversation.
Well, and it is, but I would recommend, or let me say, I might suppose that it might not should be. And I'll give you another example that is right in line with what you're talking about. While we've been here today, I got an email from a past client who is wanting to buy a $1.9 million home. And he said, not a great time for rates. He said, but I found the right house, and we've got a decent amount of equity in the house that you helped us get several years ago, and we're going to put a big chunk down. So the thing about it is, he said, it's not a great time for rates, but he's not letting the rate keep him from making that move.
Yeah.
And what we are seeing in the lending side is that is the trend, which would portend to what you just showed, is that the higher end listings, that market is moving faster, and they're maybe a little more nimble, maybe a little more willing. And if we could convince some of the folks in the 75035 type area, because that's still a very nice priced home, their homes increased in value a ton in the last little bit. Now is a great time to take advantage of having that equity and either reinvesting it into a move up, a move sideways to a different, different area they're wanting to go to, or maybe even downsizing, depending on if they moved up a few years ago to work from home and now one of them or both of them have semi-returned to the office. So don't let the rates keep you from making the right decision on, buying a home.
Yeah, and I see everybody using that terminology, right? Date to rate, marry the home, right?
Yeah.
So I think people are a lot more comfortable with that concept, right? Because you and I have looked at some of the numbers. Like if you purchase now versus waiting, 6 months or a year, you're losing the chance to build equity. And almost every example that we looked at, it was better to move in now, to buy that property now,
Yes.
and start building that equity and start getting the benefits of home ownership in that location versus waiting for the rates to go down, right?
Well, we got market data information on home appreciation for the year 2023 ending September 30th. 7.2% this year.
Wow.
Already. And
Wow.
most of the home appreciation does happen from that March to August timeframe,
Yeah.
like when kids are out. But there's still people that are moving towards the end of the year, so home values can be influenced positively towards the end of the year. So it may increase, but we definitely don't expect it to decrease. So what if you bought that $500,000 house? Let's say the $600,000 house, the median price in 75035 in January 1, okay? That home's already appreciated over $45,000 this year.
Yeah. Wow.
You're missing out on that.
Yeah.
Much less.
You're overpaying at that point.
Another thing to take into consideration is the equity position is growing because you're paying down on that amortization of the loan. So not only are you getting the improvement and appreciation, but you're reducing the debt, which is increasing your overall value in that investment.
Yeah, yeah. I mean, and if you look at our neighborhood, I mean, when we bought 10 years ago, our house is almost doubled, right?
Mm-hmm.
And I mean, we've done some things right. We were one of the COVID people that put in a pool and an outdoor kitchen, but I don't even think that's being captured in, some of the numbers that we're hearing for our residents. It hasn't been updated at all.
Sure.
So once that happens, then that additional investment in a pool, right, which you're never going to get dollar for dollar,
Right.
but if you do it right, you're going to get, 40, 70, 80%, right? And then outdoor kitchen, right? You combine all those things together. I mean, our house will have doubled probably by the time we, sell it whenever we make that decision as well.
And you're absolutely right. With the market data that is being shown online about your house, unless it's coming straight from a comparison, a CMA from the MLS, it's not going to have that extra stuff built into it because Texas being a non-disclosure state, there's no really anybody in the open market that's not a licensed real estate professional that has access to that data. So you're probably not realizing the actual value improvement being reported online on your home value.
Yeah. I want to make sure this thing is recording. Yeah. Looks like it's good to go. Because I'm going to lose my mind if this thing doesn't record again. Right, I was just going to go into kind of best practices and stuff like that, like recommendations for home buyers, like if you're selling your home, do this kind of stuff. Is that cool?
Oh, absolutely.
Cool. Yeah, and so we were talking about if you're trying to sell in this environment, right? What are some of the things that you can do to kind of increase your odds, right? And to me, it's just making sure you have the right realtor, right? Mm-hmm. Understanding. Hey, what are you going to do in this market to help me sell my home, right? So that listing presentation is key, right? Help me as a seller understand what kind of marketing are we going to do, right?
What's going to make it stand out?
Yeah. Well, are you going to have a broker's open and invite everybody over, right? Because a lot of these, I was in a luxury home a couple weeks ago, and they had a broker's open, and the house was almost sold before it actually went on market, right? I mean, and it was on market while it was under contract and getting closed. So the 2 or 3 weeks it took for all that to happen was part of the time it was on market, right? So making sure that you can connect with other experts and having those those kind of off-market listings, they call them pocket listings, where there's already interest before you even send out one flyer or broadcast or do one video or do one social media post, right? So making sure that you've interviewed your realtor, that it's going to be a good fit personality, that you're aligned, you think fairly similarly, there's trust, right? And you feel like they're going to add value. And then little things to do in the home, right? I was at a house that the pictures all had kind of their their furniture for the people who previously, lived there. They moved out, and they didn't stage the home, right? So while they had a really nice kind of Mediterranean style to it, to me, it kind of limited them, right? To where you see some of the newer staged homes,
Right.
has new colors, new palettes, new
You have the experts
styles.
staying up on what's moving in the market.
Yeah,
What
yeah,
appeals.
and appeals in a broader fashion to
Mhm.
people coming to look at your home, right? And we've talked about when people come into a home, they at least want to see the living room staged. That's over 50%. Over 40% want to see the master, right? They want to see that master bedroom staged, and then 30-something% want to see the kitchen, right? So depending on where you want to invest in staging, it makes a huge difference, right? Not only in making the buyers happy when they walk in, but also with some different colors and styles of furniture that have a broader appeal. You may have some really nice stuff, right? But it could be limiting to your style versus having a broader appeal of just random people walking into the house.
I have two examples that absolutely validate what you're talking about, but it actually has to do with the painting of their media rooms. Okay, so worked an open house several weekends ago, and the colors were perfect: Dallas Cowboys and maps on one side, Cowboys on the other. The other media room that I saw here in Dallas, Texas, was black and gold Pittsburgh Steelers.
Wow.
And the seller was not willing to repaint that room prior to selling. Okay, the one in Dallas, it might slow you up a tad, but you have a better chance at it. Or you could go neutral.
Yeah.
The Pittsburgh Steelers colors, it's not going to help you at all.
That is few and far between.
Exactly.
Yeah. And obviously mine is mine's a certain color, and I when Stacey and I were talking about, hey, this is the color we want to put it, right? Because we're going to live here, we're going to enjoy this. But we absolutely knew that we were going to paint it a more neutral color when we sold it, so it would appeal to a broader audience, right? And not, right? Everyone's so competitive with their sports teams. You don't want to have something that's going to just automatically turn somebody off, right? They may fall in love with the house and get to media room, and that's going to completely blow up your deal, right?
Exactly.
So the attractiveness is just basically gone down the drain. So you're going to want to invest in a little bit, right? And then also working with them marketer, right? And we talked about the listing presentation. What kind of marketing are they going to do, right? You and I are filming this right now, right? Because social media is a big part of it, right?
Yeah.
You have to understand how people are buying homes today. And so they're looking for, Google, they're looking for YouTube, they're looking at different social media sources to find out about homes and markets and all that kind of stuff. So making sure that you're selling to the neighborhood, right? When you're doing an open house, you're blasting that information on, hey, do you want to pick your new neighbor, right? Do you have some family you want to get closer to or closer to you? And making sure that you're getting that information out there, right?
To validate what you're saying, I sat in a class back in June, and in June they said that over 90%, 92% of all prospective home buyers have already been looking online even before they reach out to the real estate professional. So that means you may have a buyer out there waiting in the wings for a listing you're about to put on the market.
Yeah.
Or maybe you have that listing on the market and they see that and they decide to become a buyer. So it really does matter, the visibility in the marketing plan on your individual home, getting your home listed and marketed.
Yeah, absolutely.
So one thing that I have actually been addressing, do you mind if we talk about that? Hang on a second. Do you mind if we talk about that potential market shift?
Yeah, absolutely.
Okay, because I've actually worked through this objection now twice.
Yeah. Just gotta get some glasses on this thing and just make sure. Yeah, we only got 14 minutes so far. Yeah, because I'm pretty much done on material. I'm ready to start talking about.
Why not? I'm sticking back on why not to wait.
Yeah,
So,
you can talk as long as you want.
okay, so I'll start now talking about the last housing cycle versus now. Okay. All right, so I've spoken to 2 clients in the last 4 business days, and both of them are fully qualified, and the rates don't scare them. They don't mind it being 8, 8.25, 8.5, depending on the scenario. Why they're waiting on the sidelines is both of them are expecting house values to fall, if not crash.
Yeah.
I specifically went out and got data to present to both of them, and I want to bring that to you as well as to why we really believe that's almost not possible. Like, we're almost certain
Oh, yeah.
it's not possible. I present to you the 7.2% appreciation through the end of September in 2023.
Yeah.
But right now, the last time we went through a housing cycle, let's talk 2007 to 2011, unemployment was at a sustained double-digit rate,
Yeah.
and right now it's in the mid-threes. Okay, that's not the same, right? The last housing cycle versus now, there are over 17% more jobs in the market, which equivocates to being, I believe the numbers were like 138,000 jobs to 162,000 jobs.
Wow.
Okay,
Yeah.
Mortgage delinquencies at that time, they were prevalent. They were literally into the low double digits, and right now they're at literally all-time lows, hovering right around 3%. We're talking about all delinquencies, ones that are just 30 days late, 60 days late. So what you're seeing is more people are being able to afford and are affording the homes. Okay, what the clients that are expecting home values to fall in the near future need to keep in mind is the last housing cycle was fueled by zero down payment and home loans, stated income loans, no income verification, no income, no asset verification.
Yeah.
People were able to buy investment properties with 0% down.
Wow.
Okay, those loans don't exist.
Yeah.
They don't exist.
Right.
So are there reduced documentation loans in today's world? Yes, but you got to start putting like 20-25% down.
Yeah.
So the equity position is there instead of 0%. Okay, to get a standard conventional mortgage loan, debt to income ratios have been drastically reduced, and now even more so, the housing payment against income, total income calculation has been scrutinized in addition to total debt. So I told you all of that to tell you this. It all pertains to the fact that we're not going to have a housing crisis, right?
Yeah.
We have more people looking to buy. That we have 80% less homes on the market in today's market than we did in the last housing crisis.
Yeah.
And over the last 5 years, this is one that I actually have a secondary point to talk about because I found this out last Friday.
Mm-hmm.
Over the last 5 years, in comparison to the previous 5 years that preceded the last housing cycle, home builders have built 40% fewer homes in the last 5 years than they did preceding the housing cycle. So you have more demand, less inventory.
Yeah.
But the good news is, and this is talking about the listing inventory becoming available. I met with two different builders on Friday, and both of them are in the middle of starting double-digit spec homes, meaning they're going to get the shell, the concrete, basically everything right up to the point where someone could pick their brick, all their colors, and have it be done a whole lot faster.
Wow.
And that's right here in North Texas, right in Frisco, Prosper, Salina.
Yeah.
So that is going to be help. That's going to help the market. That's going to help provide opportunities for home buyers that are looking to do something in that nature. And the rates where they're at right now are actually slowing some of the home buyers, like we talked about earlier.
Mm-hmm.
Which that's also helping the inventory. We're seeing, like you're saying, we're seeing the inventory rise slightly, not a ton.
Yeah.
But there's still less than one listing on the market for every 3 pre-approved home buyers right now.
Wow.
So now's the time to buy. Don't lose out on the equity. Don't lose out on the appreciation.
Price.
Exactly. So you can always buy now at the lower price. Rates are going to fall in the next 12 to 18 months. Refinance to that lower rate. You'll owe less. Your payment will be less than waiting on the rates to come down. And the house prices are not.
Yeah.
So that's what I got.
Yeah, I mean, I kind of struggle, right? Because supposedly rates are going to go up towards the end of the year, 2023. But I really do think that, like, kind of Q1 of 2024, I think we're going to see some drops in the rates, and that's just a complete guess. But you can only continue to take rates up, and it shrinks and stops the economy from growing to the point where you're like, okay, we need to kind of kick it back into gear. So once they start bringing that in, right, it's going to kind of fuel that growth again. So
right.
That's just a guess, but if I had to, I would say, Q1 2024, there's probably going to be a small tick down. At that point, you've got a ton of pent up demand,
Mm-hmm.
and then at that point, you're right. It's that old seller's market, right, where you're bidding over whatever the listing price is, right? Multiple offers, right, above listing price, right? And that's what you want to avoid, right? People are like, well, I don't want to do it, because it's at 8 right now, right? Whatever. It's like, okay, well, it's going to be 7.5 in Q1 maybe, but now you're competing with 3 other people. Now you're paying $30,000-$40,000 more for your home than you would have last year, and you already had equity built up. So
if the rates come down even 1%, the real estate and mortgage business will kick in to a decent degree. If we get into the sixes, which we believe is very likely,
Yeah.
it's going to be crazy again, because those folks that didn't buy when it was at 6 and wish they had, number one, their houses may have just come back into their affordability range.
Yeah.
But number two, they're really like, okay, I'm not going to miss out on this again. There's going to be FOMO, big time FOMO.
Yeah.
So yes, again, avoid the rush. I mean, it's going to come. We can feel it. There are cracks in the indicators that are telling us that things are starting to move in the long-term direction. So the Fed, we believe, as a mortgage and lending industry, they may have moved too aggressively, too quickly, and yet at the end of the day, they have tamped down inflation. We believe inflation will continue to cool, and as inflation cools, borrowing costs will become less.
Yeah.
And the mortgage rates will go down. The treasuries will become more attractive to the institutional investors, and that'll drive mortgage and bank rates down even further. So we believe that we may see a hike in November, maybe another quarter of a point, but we also more believe that it'll stay put with the Fed, the Fed funds rate, and that as we get into winter, things will slow a tad, which will cause them to start dropping the Fed funds rate come next February, January.
Yeah. Yeah. And then again, with a lot of new inventory with, even where we're at in 75035, kind of the main Coit area. If you look at Fields, right up there by PGA,
Mm-hmm. Yes.
right? There's a lot of places that are starting to release and start to build that new construction. So it'll be interesting to see how that timing with potential rates coming down and some pent up demand. It's gonna make for an interesting market, I think.
I did a read up on that Fields development. Do you know it's going to be almost 6 times as big as Legacy West was?
Wow.
Legacy West was like 398 acres. This is going to be nearly 2,600 acres with total, retail, dining, living areas. It's going to be an absolute, massive, and it's going to drive home prices up. I'm telling you right now.
Big time. Well, then they finally sold that property at Lebanon in the tollway, right? It was going to be a Whole Foods, and I think they kind of backed out. Somebody bought that, so they're going to have entertainment, shops, massive footprint, right? And so again, buying now and then watching your home just kind of go up way over offsets any fears you have about, should I buy now or buy later? Buy now, right? There's
Absolutely.
Too many indicators that say that now is a good time.
Absolutely.
Now, speaking of good time, I know that you guys took a little family trip over to little Las Vegas.
We sure did.
How was that?
We had, first of all, 3.5 days in Vegas is the longest 10 days you could ever spend.
I'm kidding.
Because you don't sleep.
Yeah.
You're going through money like water, even though you're trying to keep the budget tight. But we had a blast. We flew in Wednesday afternoon. We actually caught a little bit of a nap, and then we watched the Rangers game, and then we caught the late show for the new Sphere, Las Vegas, that opened up.
How was that?
It was one of the most amazing shows. I guess I don't know how do you call it. It's not a show. It's like an event. But we flew in the night after U2 performed one of their concerts, and we flew out the day they were performing again. So we just got to see what's called Postcards from Earth, and it was unbelievable. That theater is 4D. So not only do you have 160,000 speakers in there, your seat's shaking, and as you're in a helicopter or whatever vehicle they've got you flying down into this canyon, they're blowing air up the amphitheater to where you feel it coming. It literally gives me chills thinking about it. It was so cool.
Yeah.
I tried to take video, and I did take video in there, but you can't capture how full encompassing it was. So we did that on Sunday. So we watched a Rangers game, did the Sphere late, and we caught the 9:45 show, so it was 11:45 Dallas time.
Nice.
Slept in a little bit the next morning, and then we caught the Rangers game in the afternoon, and then the Cowboys played that night on Monday night.
Sweet.
So we ran over to Caesars, sat in the sports book, and had a good time doing that, betting on some games and betting on some individual players and stuff like that. A couple of parlays at $2 a piece or whatever.
Yeah, those are so fun.
Yep.
Right?
And so we got to see Eddie Griffin, the comedian, that night. He's,
wow.
The Undercover Brother and many other movies, but he's funny.
He's hilarious.
And then the whole thing was we surprised the boys with the Dallas Stars were playing in Las Vegas while we were there. So the next day we got out, we played around, and then we surprised them with their jerseys that we had kind of snuck from Preston's wife Olivia, and then Mama went up and kind of snuck in Peyton's room and slid it out of his closet. So we opened up the suitcase, said, guess what? Because they kind of sniffed it. Press was like, "Oh, dude, the Stars are in Vegas." We're like,
Yeah.
"Really? Are you kidding me?"
When do they play?
Yeah. So anyway, that was a lot of fun, and
Nice.
the Stars did not win the game,
Oh.
but they did get a point out of it because we went to overtime.
Okay.
So we kind of went. We had 2 baseball games and a football game and a hockey game, and we went 3.5 stars out of 4. So not too shabby.
Yeah, yeah. And I've seen some of the footage of the Sphere, not only kind of YouTube concert, but some of the other stuff, kind of the postcard stuff. And
Yeah.
man, even some of the shots outside of the Sphere, right?
Oh,
There's
yeah.
one like kind of an eyeball thing that's almost like too good. You're
Yeah.
like, ooh, I don't want to look directly at all the the DNA that makes up the eyeball, the veins and the lid. It's like, wow, it is killer graphics.
It's amazing. Anybody that's interested, there's a 13-minute video on YouTube that talks about the construction of that thing. And I won't even try and get into it because it's amazing, and I can't even begin to quantify to you how much steel and concrete was involved in that thing. It's just amazing.
Yeah.
But it's like $2.3 billion to build that. So as we
Really?
we were walking up on the outside, they had a full high-def jellyfish show. Like you were underwater walking next to jellyfish, and it's super clear.
Wow.
And you get inside in the lobby, and they had an AI. They had AI robots. There was like 4 or 5 of them, and that you could say something to them, and they would turn to you, and they would answer. I told Cindy, I was like, I don't know whether to be amazed or scared to death.
Yeah.
And then she was like, I'm not sure. Not
Yeah.
probably, but I'm not sure. I would have to calculate that, or I'll have to check into that. Stuff like that. It still was really cool.
Yeah, that's awesome. I'm trying to think of anything we've done.
Where are you going?
Oh, well, we're going to Italy. So for the second time in 8 years, we're leaving just in a couple days, starting off in Rome, and then going down to Parma, Siena, Florence, and then flying back out of Rome. So
Wow.
we absolutely love it. It's we're going to do some wineries. Ruffino is a big one that we'll go to. They have one of the main faces of the winery is a guy named Beppe, and I mean, you want to talk about somebody who is just 100% Italian. Like when he talks about Italy, man, you feel the passion. I mean, historically, and then I'm kind of a History Channel guy or Smithsonian where I just can't get enough of that stuff. So to listen to him talk about, hey, wine in the old days, right? It was really more about sustenance than it didn't really have very much alcohol at all, right? It was just about, they didn't have a lot of meat, and so they would drink wine to kind of fill up. And obviously, it's evolved into a lot more higher alcohol concentration and not as filling, but just hearing Beppe kind of go through some of the things that make Italy unique, right? And so the history and the current times and kind of the focus on food and drink and how everything revolves around family and eating and drinking. It's really going to be a good time. So yeah, that's going to be fun.
That's my favorite Chianti. And I actually prefer the brown
Ruffino?
label. Yeah, I prefer the brown label over the gold, even though the gold's really good.
Yeah.
I prefer the brown label.
I think the gold is maybe rated a little bit higher,
Mhm,
right?
I believe
Because
so.
it's whatever the palate says, right?
Right.
The heart wants what the heart wants.
Yeah, I think it's probably more of an emotional thing like that. That was my first glass of Chianti,
Yeah.
and I was like, this is awesome. And it's different than anything else that I've had. It's not a Cab. It's not a Merlot. It's not a Syrah. It's none of that. And yet, so I think I kind of gravitated that just because it was my first one and I loved it.
Yeah.
So when I tried that the nicer one, higher rated, more expensive,
Yeah.
I was like, it's good. I'm home over here.
Yeah. I like this one a little bit better.
I'm excited for you guys. Can't wait to hear about it.
Yeah, the Prosecco at Ruffino is kind of our go-to, right? That's what we use usually for New Year's Eve and stuff like that. So you probably had some of that. I'm not a big Chianti fan. It's just, I'm not into kind of the varietals. Really not my favorite. But when I drank the Ruffino Chianti, I was like, wow, this is not your mom's Chianti, right?
Not bitter.
Really not bitter, not too fruity. It's just really a fun, delicious wine to drink. So not a big Chianti fan, but Ruffino, man, those guys, they know how to make it. So
yeah, absolutely. You can go to an Italian restaurant and they'll serve you the house Chianti, and you're like, oh.
No,
And it's going to be cost pretty close to the same.
Yeah.
It doesn't mean it's not bad, but it's not the same.
not the same,
Yeah.
but yeah. So
Enjoy it.
looking forward to that.
Cool.
All right.
All right, man. We'll catch up next time.
See y'all soon.